XRP Fed Day warning. Today is the day, folks, we get the interest rate decision from the Fed. Jerome Powell will be speaking. And I also wanted to let you guys know that we have a free crypto tax summit with Mark Kohler's law firm putting on that show. I'm going to link that up down below. 3-hour session, 9 strategies for saving on taxes. Many of us in the crypto space are so focused on finding the next runner, finding the next 10xer. We don't think about the taxes. And so I want to make you guys aware that that is going on, and that'll be after Jerome Powell's speech here today. I think Jerome, don't quote me, I think the decision comes at 11 Pacific. So I think it's 2 Eastern, and then right after that, he'll follow it up with a press conference. But the reason why I wanted to put out a quick warning for you guys here today, as I walk through the streets of Seaside, I was going to do a video in that parking lot. It's a little loud next to the main road here, so we're going to walk and talk. But here's the warning. Short-term pullback definitely going to come in, no matter what happens. It can be worse if he's more hawkish, but I don't think that he's going to be. The reason why they're going to cut today is going to be the labor market. He's going to cite, that the labor market is cracking. There's been 2 million jobs revised out of the data in the 12 months ending March 2025. So yes, it was a complete fabricated lie, the previous administration telling you that the jobs market was strong and that inflation was going to go away. Neither one of those were true. And now we have the data to back it up, right? Inflation's still running hot, although it has come down relative to where it was at. But the big problem now is that labor market. And so this is why the Fed's going to deliver a 25 basis point rate cut today. But this will be a buy the rumor, sell the news event. I've been worrying about this, okay? And so we just need to make folks aware that you very well could see a buying opportunity coming for XRP later today, over the next couple weeks. And I also wanted to make you guys aware too, we've noted the data point that every time the Fed has cut rates when the S&P 500 is near, within 2% of its all-time high, 12 months later, we finish higher. So we believe that the stock market, crypto market, it is all going a lot higher, but, big but, short-term volatility that'll come in today will be downside action. Prepare yourself for that. And then also, here's 3 examples, and very important to note. So below, we see the past 25 years of Fed rate cuts. The Fed cut rates 1 year ago, right? November, right? That was September leading up to the November election, where we got rate cuts, right? But there was a 20% crash earlier this year. That was in April, obviously from the tariffs and Liberation Day. And so we did see a 20% market pullback before the S&P 500 rallied to where we're at right now at new all-time highs. So once again, short-term volatility, and then you also are going to live through probably a big drawdown before 1 year from today, you will see new highs come in. Go back to June 2019, Fed cut rates with stocks at all-time highs, but then came the collapse of March 2020, which was 35% crash within the year. Stocks were break even a year later and then went higher amid record global stimulus. So until we really see that money printer turn back on, you don't get immediate relief. You're not going to see the problem fixed right away. 125 basis point rate cut, not going to do it. You go back to June 2007, the Fed cut rates with stocks at all-time highs. A year later, in June 2008, stocks were lower, and then in October 2008, they collapsed 55% amid record global stimulus. So you've seen, and I've shared this data point too, that every time the Fed's cut rates here in the past 20, 30 years, when we're already at an all-time high, we will finish higher 12 months later. But please understand how volatile it's going to be between now and then. And the risk to our economy here on the ground is staggering. I tell you what, I was in Seaside, and yesterday we did the bike rentals, which I've never rode an e-bike. I grew up back in the day when we didn't have the e-bikes. We were pedaling. So anyways, me and my wife, we got the e-bikes yesterday. Took the kids, I had them both a 2-seater on the back of me, and we were just cruising, right? And so we take off and we cruise Seaside. But when we got back, I asked the guy at the rental, the bike shop, I said, hey man, how's business been this year? He told me it has been the worst year in the 20 years that his family has owned this business. Worst year in 20 years. Now, if that's not a data, and this is how I like to get economic data, right? You can read all the headlines, you can read all the financial data, decode it all, right? But sometimes when you just get on the ground, like I am right now, and you walk these neighborhoods, you'll see the empty stores, the empty buildings, and then you go ask a shop owner, you say, hey, how's business going, man? And he tells you, worst year in 20 years. That's a data point, right? And so that's what I'm saying, is that the situation on the ground, there's no relief in sight. No relief in sight. 25 basis point, not gonna do it. Another 50 point, cut later this year, still not gonna do it. And so in the short term, you need to stay liquid. You need to prepare to buy the dip, because I'm expecting a pullback here in the next 24 hours. Well, actually probably sooner. I'm recording this, and in the next few hours, we're gonna get the decision from the Fed, and Jerome Powell is going to speak. So I would expect that pullback to begin here. And no matter what, if it's a 25 or a 50 basis point, we're still going to come down. If they left rates unchanged, that would be unbelievable. That would actually be pretty quite funny. Like I said, I was in the camp that they were going to try to stick it to President Trump one more time by holding rates, but then these jobs revisions, that was kind of what sealed the deal as far as rate cut expectations. As soon as we saw that they lied and revised 911,000 jobs out of the previous 12 months ending March 2025, that's when I went into the camp of, okay, they're going to cut rates. They're going to capitulate and cut rates. But XRP right now closed off yesterday at about 304, I think. It was up to 305 earlier today. And so we could get one more pullback below $3. I'm still in my XRP long, which is still, well into profit right now. And I'm just going to look at this, brief pullback as a buying opportunity. I still think that we just have so much momentum leading us to the blow off top that's coming in October, November, basically by the end of this year. I think you get that blow off top. And then once again, long term, 12 months from now, we will be higher. Stocks are going to be higher. Gold's going to be higher. Silver's going to be higher. God, the precious metals have just already been ripping. It's been beautiful to see. And of course, crypto is going to be higher, right? So the way that I'm playing this is always keeping some extra liquidity on the sidelines, making sure that you can handle cash flows covering debt service right now. 25 basis point rate cut brings no relief to real estate. And I can't wait. The bond market's going to give a big middle finger to the Fed, in my opinion. You're going to see rates actually go back up, real rates. Because the Fed can cut rates all they want, but it's up to the bond market. And that 10-year is going to determine the mortgage rate. So real estate, I still don't see any relief there. Main Street economy. I'm parked right here. This building's empty all around me. Seaside, I've been here traveling to this town since I was a kid. I don't have the strongest memories of everything. But just last time I was here was in 2020, and it was booming. It was popping. Now we're here right now in September where they've already passed the peak season, so it already has kind of slowed down. But I'm seeing a lot of empty buildings, a lot of restaurants and shops, a lot of places to eat weren't even open yesterday at all. And so I know they were kind of past their peak season, but just driving through, drive through Main Street, wherever you're at. I'm here in Seaside, Oregon, but wherever you're at, and tell me what you're seeing on the ground. Because what I'm seeing is no relief in sight for the mainstream economy, and these rate cuts, I know a lot of people think that this is going to be the saving grace, does not fix things right away. And a higher stock price, higher crypto market does not really bring relief to Main Street either. You're talking about the poor and middle class that don't own these assets that are going to go up in value, right? And so this is why we've been saying for the past almost 5 years now that I've been making content, stack as much of these suppressed assets as possible. These assets are no longer suppressed though, right? XRP went from 20 to 30 cents when we were accumulating it up to over $3 now. It's, still being held back, but we have the ETF going live tomorrow, the first spot ETF So this party's about to get started for XRP. Party already got started for gold, right? Up to 3,700 bucks, I think I saw yesterday. Silver up above $43 per ounce. So once again, for those who own assets, and the game here, the program is to get as much of these assets as possible, because inflation's not going away, no relief for the Main Street economy, and these assets are going to continue going to the moon. The volatility in the meantime is going to shake out the over-leveraged traders, and that's why we always urge caution, keep liquidity, keep extra margin, and stay safe out here. Don't get ahead of yourselves like the crypto space likes to. But I just wanted to get out a quick warning, guys, because the market is going to be coming back down in the short term, right? And outlook over the next year, very bullish, very good. Outlook over the next few months, very bullish and fantastic. But when the prices come back down today, don't come running to me saying, oh, Zach, what happened? You said it was going to the moon. No, we didn't. Not until after we played out this buy the rumor, sell the news. And then we have ETFs going live at the end of the year, digital asset treasury companies coming in. The liquidity cycle is about to top out, basically now into the beginning of into the beginning of 2026. And so take advantage of that to rotate out of positions that don't have fundamental value. Over leveraged tech stocks, crypto meme coins with no utility, etc., etc. You guys know what I'm talking about. And get yourself into good assets, fundamental value. They're going to continue to appreciate over the years to come. With that being said, I'm going to put the links on down below for the Crypto Tax Summit. It is free. Go check it out. Mark Kohler's law firm, KKOS Lawyers, they are working on my family's trust right now as we speak, along with setting up additional entities for my other investments and businesses as well. Really encourage you guys to go take a look at their firm if you are looking for basically legal or estate planning services. They understand crypto, they get it, and I'm excited to apply some of their strategies to save on taxes and then have them set up my entities to protect our wealth. That's what it's all about, guys. Linked up down below. And if you aren't able to make the live recording, you'll have access to it for up to 3 months when you register. And so take advantage of that, okay? I'll see you guys in the next one. We'll be watching Fed interest rate decision day. Going to be a fun one. You guys have a fantastic day. Thank you for your support, and God bless you all.